Well, hello again to our investors and webinar viewers. I'm joined now by Wespath's current CIO, Dave Zellner. And you've already heard some interesting webinars and heard from our colleagues. Thank you to Joe, Karen, Hua, Frank, and Chirag. They shared their perspectives with you, as well as the depth and breadth of the work being done here at Wespath. And now I feel very fortunate to spend time with you, Dave, on your last webinar here at Wespath. Your retirement date is around the corner on August 1st. I'm excited to be here with you. It's been a very interesting time in the economy, geopolitically, the markets, but even more specifically to our Wespath funds. And so I've been asking this question of the team lately, and I'm grateful that I have the opportunity to ask it of you. How are you feeling right now?
Thanks, Johara. Hello, everyone. It is good to be with you for my last webinar. It's bittersweet, having been with Wespath for 27 years, to sail into the sunset, so to speak. In a couple of weeks, but I've really enjoyed my time with Wespath and the support we've had from our board of directors and the culture and interacting with participants and interacting with clients. It's really been very personally meaningful to me. Now, all that said, I do wish that I would be going out on a high note in terms of relative performance, particularly when we look at the equity funds. The performance certainly has not met our expectations. I wish I could have gone out on a high note that we had at the end of the pandemic year, where we shot the lights out relative to the indexes. But, we're in it for the long run. We have a long horizon. And I'm really confident that the discipline that we have in place here at Wespath will continue into the future, and that the team under your guidance will be in great hands.
Thank you for that, Dave. And really, we both know as CIOs, underperformance, outperformance, it's all part of being an investor and going through these different market cycles. So I think it is important for us to stay disciplined as CIOs, especially during these times when there is significant underperformance.
I should point out that before I came into the webinar, I did some research to see how the Oracle of Omaha has performed in the past. Because, the reality is that the period that we're experiencing right now with all of the hype around artificial intelligence is really similar to what we had at the end of the 90s.
And Dave, one of the things that I keep thinking about is these valuations with these magnificent sevens. I think about it on a daily basis, and now you're starting to see that we're questioning, these high valuations. And I get to this place of, the minute Dave walks out the door, his philosophy, his strategic biases will all of a sudden play out. And unfortunately, you won't be here for that.
Well, and going back to Warren Buffett, at the end, in January of 2000, CNN put out a report, an article, and the headline was, "Buffett hits a bumpy road." And when you looked at his performance for Berkshire Hathaway up until the end of the 20th century, for the 3 years prior to December 31st, 1999, his fund had underperformed the S&P 500 by 9 percentage points a year.
Yeah.
And for the 5 years up until 1999, it had underperformed by 6 percentage points a year. So, curiously, for the next 3 years, his fund outperformed by 24 percentage points. His return was a positive 9% compared to negative returns for the S&P. And for the 5 years, it was another positive 9.5% compared to a negative return for the S&P 500. So investors go through cycles. And
Let me bring it back to you on this specific Wespath fund.
Sure.
So, our U.S. equity funds, specifically active equity managers, have been challenged, and it's primarily driven by, the Magnificent Seven, and specifically within our funds, we're underweight.
yeah,
Okay. And then another sort of perspective is really the non-U.S. versus U.S. U.S. has been dominating from a performance perspective, and our multi-asset fund has been underperforming. We have a significant allocation to non-U.S. In hindsight, and as a CIO, I'm not athletic, but I know that's something called Monday morning quarterbacking.
Yeah, right.
It's not fun to look back, but it's great lessons to learn. Hindsight, anything you would want to share in sort of how we've structured the funds or anything related to the performance?
So, as you know, we've developed a set of mega trends, which we think are these topics that will have a long runway to fruition. And one of them, for example, is the modest and sustainable growth in the world economies led by the emerging markets. In hindsight, one of the mega trends that we probably should have thought through was the American exceptionalism. So, for example, we've been exceptional in terms of the extent to which we've been able to develop technology, particularly artificial intelligence. We've been exceptional in the extent to which we've been having meaningful fiscal stimulus that we've been able to implement without having a negative impact on our currency. In fact, our currency keeps getting stronger and stronger. We've had exceptionalism in terms of the number of immigrants that we've can absorb, when combined with our fiscal stimulus has led to GDP growth that's been the envy of the world. And so in hindsight, this American exceptionalism is a mega trend that, at least for the last several years, has positively influenced not only returns of individual U.S. stocks, but the U.S. market compared to the international markets.
And right now, the team and I are focusing our research on whether this American exceptionalism will continue into the long term, the next 10 years, 20 years. And so we take this disciplined approach, really leveraging the great foundation you've left us, Dave, and spend some time, researching, and then also really doing due diligence again on the managers that we've selected to make sure they're the right managers for the next 10 years, and then focusing on fund construction. I always love bringing it back again to asset allocation or fund construction, because as you know, Dave, that 80 to 90% of the returns are going to be based off the fund construction. And so I think it'll be important for us to get it right going forward, especially for the multi-asset fund and some of our other great funds that we have.
Absolutely.
And so I'm excited. I'm really grateful for the legacy that you've left me and the team, the great team that we have at Wespath. And so going into the future, I hope you still have your phone available so we could give you a call whenever we need to. Thank you, Dave.
Thank you.